Okay, let's get into the stock market technical analysis. I'm going to give you guys just kind of my morning read on the market, what I'm seeing, because I think we're at a pretty pivotal point in the markets, just the way the charts are set up. So let's drop right into it. If you guys are finding value, drop me a thumbs up. Please feel free to join the private member group if you're interested in getting additional trade ideas and market insights. I'm in there commenting pretty much daily with additional charts and just market commentary. Okay, link in the description below on that one. We'll start off today with triple Qs, guys. So our bearish rising wedge chart here, it's been broken again. It's been violated. You can see with the little gap down, and they're selling it, pretty good. It's, the trend line's been violated a bunch recently, so I'm not putting as much weighting on this trend line and this gap down. I'm more interested, I think, in about 434-ish level. Which is this is where we gapped up after Nvidia earnings. So this is where the bulls should be sitting. They should be sitting right there, trying to hold that Nvidia earnings gap up. All right, so we take that out. That's bearish. We'll probably get a bounce there. I would think we get a bounce there. I have an alert set on that, and just kind of waiting to see that. It looks like we're trading right down to it this morning. So yeah, that level again, 434-ish. Let's look at the NASDAQ futures. Haven't looked at those for a day or two. You can see here on the NASDAQ futures, a little bit cleaner of a chart, definitely than the triple Qs. And you can see here, we had this rising channel, negative divergence remained intact. We broke backtest 1, backtest 2, getting rejected. We need to, I think just a little bit lower, because again, we rejected this trend line a couple times, and the buyers have been there, stepped back in and bought it back up. So this is Nvidia earnings here, and sold off a little bit. Now we never saw, this is a pretty impulsive rejection on the futures. We didn't see that previously. It was more like a bull flag. You can see Nvidia earnings pulled off, but nothing really impulsive. They smashed it again, but now we're seeing pretty heavy selling, big red bars as of right now. So let's continue to watch this. If the bulls don't step in and we, even continue lower, that could be that impulsive rejection that you'd want to look for. Usually, when you're back testing a trend line, which is what we're doing, you want to look for impulsive rejection of that trend line for an indication of a sell signal. So far, as of right now, we do have that. Okay, here's SPY. Again, SPY, this is, your uptrend line that's consistent with the rest of the markets. You got support. There's another reaction there. We broke here. This is pre-Nvidia. There's the recovery. So we're down. We're below that trend line. But again, you can see we've kind of chopped through it a little bit. So it's not quite as important as it was. Let's look at the S&P 500 futures, ES. And you can see here, if I extend that out, very similar to SPY, kind of been chopping through it. So again, we need to see that impulsive rejection of these trend lines. Here's the Nvidia earnings. And again, I think that's going to be pretty important to the market to try to hold those post Nvidia earnings. If you erase the move up and you start to move back down and you erase that move up in the Nvidia earnings, it's going to be psychologically important. So something to keep an eye on. Okay, let's go through some of these charts. I do want to cover SMCI. That was one that we've talked about in the private group. Yesterday, at the very end of the day, right before the market closed, I noticed that they were dumping out SMCI, and it looked like the market makers, the institutions, were going to try to hold this candle right here. This is the candle I've talked about as the key level. Yesterday, you can see they rallied it way up here. They were way above the candle, but again, that's intraday. All right, so they're just running stops, and they'll do that. When you have a key level and everybody's got an eye on it, they'll run it way up against that level, run a bunch of people out of the trade, and then in the last 15 minutes, they reversed it, sold it back down. Candle closed right at the former high of that bearish engulfing outside day candle. So that's a reversal. We have a trend reversal right here. You back test, rallied up into the candle, and I talked about this. Previously over the last couple days or weeks or so, I've said, look, oftentimes they'll run it right up into that candle, and they can sometimes pop it, but it's all about the daily close. And sure enough, back below. So at this point, if we get back above here and get that daily close above that former high, it's about 1,080-ish. If we get back above there and get a daily close above there, that's probably where you'd want to stop out of the trade, because we no longer have a top. All right, this bearish engulfing is you trade this as if it was a top, and if you start closing back above it, it's not the top, so you stop out. Otherwise, it should be the top, and we should continue lower. All right, and so far we're down 8% today. From those highs yesterday, this thing's down 15%, just a matter of really basically minutes, because it sold off in the last 15 minutes of yesterday, and first hour of trading today. So the profit target is all the way down here at 356. Okay, that's your former support. So we start to roll down, there's tons of profit potential, all right, down there. It's interesting as well. This stock's almost been like a red light, green light for Nvidia. You can see Nvidia is down today as well. Not a lot, all right? So there's not enough here to say that we have a top in Nvidia. We need to start breaking some trend lines, breaking some support. Here's your earnings level. There's your post-earnings gap up level. So I think that's a critical level. You start breaking that, then yeah, we probably put in a top in Nvidia. So we'll keep an eye on this one. Nvidia is an extremely crowded trade, so don't underestimate what that rush for the exits can look like. It very likely will be sharp and impulsive, so keep an eye for that. There might be a day trade for some momentum to the downside. We'll see. And then when I look across the board at all the FANG stocks or Mag 7s, they're all down. Here's Apple, just pretty much imploding. All right, guys, Apple's like, I don't know if it's the largest company in the world now, because they kind of keep flipping back and forth, but it's close, and it has a huge weighting on the indices, the S&P 500 and the triple Qs. It's owned by tons of ETFs and institutions. Believe me, this matters. So the Apple is selling off. Now there's some support. It looks probably down here is where the buyers will step in, down at this reaction low, most likely. So a little more downside coming into some support. Probably going to get a bounce there. The other thing to also notice, which is interesting, this low that we were right down in here was technically a divergent low on the daily chart. That's been burned through. That no longer exists. So negative momentum, negative price action. This is a bearish stock. It's sell the rip, all right? Now, I do think we'll probably bounce down, down to this 167 area and maybe fill some of these gaps. So that'll probably keep the market from collapsing while Apple's doing its bounce thing. But again, this to me looks like it's heading lower. Tesla, just same thing as Apple, just kind of imploding. Going lower most likely, and obviously there's Nvidia. Google's below the 200 days, so we'll see where that closes. A daily close below the 200 day would be the technically significant update. So that's what you'd want to be watching for. That's bearish. You start closing below 200 days, and the algos flip. The high frequency traders flip to sell the rip. So there is that. Microsoft starting to break trend here. This is all right. So this is your daily chart. Here's support, just starting to break trend. Let's see it. The day's not over. The buyers might step in and try to hold this trend, but it's below trend as of right now. So we'll need a daily close below that, and not just inches below it. You want to see an impulsive close below it. Would be a sell signal in Microsoft, and at that point, you've got sell signals on some of the major Mag 7 stocks. Nvidia can't hold up the entire stock market by itself. Meta, no real significant change here on this one. We've just been kind of grinding higher within this cluster here. We do have negative divergence, but there's no change there from the last couple weeks, so we'll just continue to watch that one. Amazon, kind of the same as Meta, no significant change, just kind of holding this cluster here. Looking at the sectors, I don't see like a ton of rotation, really. I mean, obviously XLK is taking it on the chin today. Down, that's your tech sector. Yeah, I mean, XLU, that's your utilities, so that's risk off. It's a risk off rotation is what you're seeing, at least today. Doesn't mean that's a trend, but that's what we're seeing today. And, you know, but that's about it. Not a ton of rotation. You know, XLF, which is the financials, is about flat. And little money going into energy. So not a huge rotation, really. I mean, it's interesting to see XLU up that much because that's clearly a risk-off move. Gold and, you know, the gold miners, they're all up today, but I think they're hitting resistance. Here's GDX. You can see I've got some resistance right here. We got a couple reactions. If I extend that out, it looks like there's actually a few more. Enough reactions in that area. And then we have the 200-day moving average. This thing ramped right into the 200-day. So I think it's pretty likely you're going to pull back and, you know, I don't know, fill some of these gaps maybe. Maybe down here would make sense, 2730 or so. So we're running into resistance now on the miners. Likely going to see a pullback there. I'm still, you know, I still think it's probably a buy the dip opportunity. So if you do get a pullback, I think it's probably an opportunity to buy the dip. So we'll get another leg higher. So we'll keep an eye on that. GDX, yeah, I think GDX can run up to this trend line up around 31. But yeah, a pullback would make sense here. 10-year Treasury yield dropping today and below the 200. We'll see how the day closes. Falling interest rates should be net bullish for the market. So we'll definitely want to keep an eye on that because it typically would be net bullish. So again, when you know the day's still young, we'll need to see how this closes. If they step in and buy this thing, or you know, essentially selling treasury bonds, then interest rates will rise, and you know the day's still young, so we'll need to just keep an eye on that. And then the dollar also really isn't doing much. It's kind of muted. Here's the dollar futures. It's just really going nowhere there. So that's yeah. I just don't see anything in the dollar. So tells me that there's really no sustained move quite yet that could take place in gold or really just the markets. So watch the dollar. The dollar starts rising. That will likely mean interest rates are rising. The dollar falls, interest rates are falling. Falling dollar should be bullish for stocks. Rising dollar, negative for stocks. We just don't see, there's just nothing going on right now. XLV, the financials, again, pretty flat today, but interesting enough, it's just holding this wedge. I mean, it's pushed it as far as it can. I guess it can go maybe a day, one or two more days. I think the Fed's coming out this week, so that's likely going to be the trigger. But yeah, right in that apex of the wedge, negative divergence. It's set up to drop. It just hasn't done that yet. And then XLV, which is our healthcare sector, again, sitting right on resistance, support, or sorry, right on support. There it is. So no sell signal on that one either. So XLF, XLV, you know, still holding up. We'll continue to watch these. You know, you want to see sell signals. If you want to see a broad market sell-off, if that's going to happen, it would help to see sell signals in some of these other sectors besides the tech. I think the tech sector can pretty much bring the market down by itself, just due to the weighting. It's so heavily weighted. But, you know, if you see rotation into the other sectors, all the other sectors besides tech, the market can hold up. Okay, that's really all I have. So I'll get the video out, guys. Drop me a thumbs up. Catch you on the next one. Bye.